Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, October 27th, 2020, and there's a lot moving markets, not only yesterday, but today. So let's get right down to our topics of the day. So let's start with volatility. We saw a lot of volatility in the market yesterday. We're seeing some more today, some sell-off, repositioning, and that's all because there's a lot of uncertainty, not only between now, 1 week from today, America gets to decide, but ultimately, I think November 3rd is not going to be the ultimate definitive factor as to which way the election shakes out, simply because we're going to predict the next 10 days, the 10-day volatility index. So we're going to see, we saw yesterday, today, maybe even the next week or so. In fact, some different states, some swing states, when in polling and voting, are all different in terms of what they can accept and what they can report as it relates to their ballot box, right? And so some of them can report even 3 to 4 days after the election itself on November 3rd. So that's why I wrote up there, expect volatility over the next week, week and a half, not just the next 1 week from today, which we will have sort of the finally anticipated presidential election. It'll be nice to have some certainty going forward. In the meantime, we will see volatility. Yesterday we saw the odds on a Democratic blue wave. If we look at the portfolio itself, there's different portfolios that are positioned that we monitor here at Blanke Schein Wealth Management. That was traded down significantly. So we know that the market sold off, but the opportunity of a blue wave basket, those stocks that are in, let's say if the Democrats sweep the presidency and then Congress itself, House and Senate, that had a major sell-off. That's continuing today. So that just predicts that the election is getting tighter right now, and there's a lot more sort of work to do on both sides of the aisle as it relates to campaigning. And so it always becomes tight right before the election itself, but it just shows that it's going to be a fight to the end, if you will. And so markets are selling off as anticipated of that uncertainty. But the blue wave right now, what we're seeing here at Blanke Schein Wealth Management, that is off the table. I'm gonna go out there right now and say there's probably a lower indication of the blue wave is off the table. That just means it's going to be a tighter fight between those states and a toss-up for, let's say, the Senate itself. That's what we really want to pay attention to as it relates to policy moving forward. Markets are paying attention to that as well. So we saw that yesterday. Now we're clearly into earnings season. We had 169, sort of basically a third of the S&P 500 report for the third quarter earnings right now, S&P 500, if you will. And here's what's interesting. Let's go to the board here. 83% have reported beating the analyst expectations for the third quarter earnings. That's incredible. And on an average beat, 19.3% as an average beat. So 20% beat on the upside, 83% of those, third of the S&P 500 already reporting right now. Those are incredible numbers, right? Because that really shows that we have, the economy's poised for growth and there's more growth to come. We turned the corner in the third quarter, if you will, economically speaking, and there's a lot of economic activity, and that's a positive sign. The average beat is about 3 to 5% when companies beat to the upside. So to have it disproportionately outside the average and so strong is a healthy indication of the U.S. economy. What matters most, what we're paying attention to for our clients at Blanke Schein Wealth Management, are earnings. Earnings move markets, so that's a positive. Now, the question is, on a go-forward basis, what does growth look like? Because have most of the pricing, pricing of the S&P and the NASDAQ and a few others already been baked in, right? Are we already there at those levels right now? Well, there's good news on this front, because I later this week we're going to have the third quarter GDP, and that's sort of going to be the other litmus test. Analyst expectations continue to rise. So we're seeing economists come out there and say, originally it was only going to be 20% GDP, 15 to 20. Now it's 25. Now it's moving to 30. I originally said, if we go back on our daily updates, I say it's plus 30. I want to go in the 35% range, simply because there's a lot of economic growth and pent-up demand in the third quarter. Why the GDP matters? Well, if you get a 3% average rate of return on just the annualized GDP, that translates into the U.S. economy for every man, woman, and child, over 300 million Americans, over $25,000 per kitchen table, per person. So the GDP is an economic barometer as to the prosperity of the economic engine in the United States, whether you're better off or worse off, whether you have an economy that can pull through and bring jobs for you out there, and that's what we need right now, is essentially the unemployment is still persistently high, and it will be so. However, you still need that economy to grow so corporations can still hire versus laying off. And finally, we know that Congress is going to agree to disagree. We here at Blanke Schein Wealth Management correctly predicted this one, that it wouldn't happen before election season. And ultimately, that's what's playing out. So I said, don't hold your breath. And we sort of knew that they were both going to play games with the political football, and they did. So we'll see if next Tuesday it hurts one side or the other more than the other. The reality is that the U.S. consumer needs help. There are people that are unemployed, and there are small businesses that can never and will never reopen. And this whole political football game, that all of the oh, here's the deadline in this, and here's the deadline in that, and I'm serious, and I'm going to negotiate and not negotiate. Both sides honestly should be ashamed of themselves, because that's not acceptable. The U.S. consumer needs some help. There's a tale of two economies. There's the have and have-nots, corporations that are public, that have access to corporations that can sell sort of equity, bring in cash to the balance sheet, or even debt, the highest offering of debt we've seen in many, many years for corporations. They are solid balance sheets. They can weather this economic storm. The mom and pop sort of restaurant that we're seeing, that we love, we want to support, I don't know how they survive. So by Congress doing this political football game, should be ashamed of themselves, and it's absolutely not acceptable. And hopefully we make that very clear for all of them 1 week from today, politically speaking. Volatility next 10 days, I talked about that. The economic activity, look for the third quarter GDP later this week. Right now, earnings season, it's coming in stronger than expected. That's all positive. So the short-term volatility, ultimately there's a lot of portfolio positioning, repositioning out of strongly a blue wave side. So now it's coming closer to the middle. So we're seeing a lot of the sell-off happen on some of the sort of blue, Democratic supporting baskets within the S&P 500, and that rotation is normal and natural. So there's a lot of portfolio positioning adding to the volatility as well as the uncertainty. So that's it for right now. Thanks for watching. Again, later this week, I'm going to take my oldest to a college tour. So we're going to give you some additional updates that we've already pre-recorded for you, and I think they're great for you to watch. But stay tuned. I'm going to give you updates as best as possible. And thanks for watching. Share with any friends or family that might want to watch our updates, and have a great one. Thank you.